Hello and welcome to another episode of Backtesting the ICT 2022 Mentorship. This is episode 15 for Trading Day Tuesday, January 9th, 2024. Here we are on the daily chart with a big reversal. This is a short-term low, a swing low, moving up into small imbalance on the daily and into the next imbalance. I would argue we are going to continue moving higher. This is a market structure shift to the upside. So my money is on Tuesday, this trading day, of being bullish. 1 hour. We do have some movement down. Jumping ahead to 8 a.m. Here we are on the 15-minute. And then let me turn on the drawings. All right. So we're marking the New York Midnight Open, buy side liquidity, previous day high, 1 hour fair value gap, and then we focus on looking for setups. As you can see, when we are on the 5-minute, here's our news embargo being lifted, 8:30, 9:30, stocks open, huge move up, and then reverses back. Some very long wicks, some indecisiveness. There's a move up. We have our market structure shift, creating a 5-minute fair value gap where we start looking for an entry. There's our entry. Where's our target? I'm going to be taking a partial right where it enters this 1 hour fair value gap. And then I'm looking to take the rest of it off. Opportunistic target right here, buy side that we marked. This is a massive number of ticks, points, 80.25. But that's okay. Here we are. Our partial set around 38. What do we do here? Pay the trader. Takes out the opening. We're drawing up into our buy side target. Let's zoom out for a moment. I know I'm jumping ahead by showing that, but there's not much I can do. Right here is the previous day high. Some sideways movement. And then we take out both. But this is our exit. Now, We're in lunch. Create some buy side. Move down into this 5-minute fair value gap that was created right before lunch. Now, the reason we don't take this trade is because I want to see a market structure shift. That is the higher probability trade. When we take out these relative equal highs, that's the market structure shift of bullish. It's trading back down. We don't know if it's going to continue down until it reverses with displacement. Once the market structure shift occurs, we look for a fair value gap to be created afterwards, and then we look for an entry. So here's one fair value gap we trade down into. We also trade down into this fair value gap, an old fair value gap. Now, if we take this trade and we target this buy side, it's a decent, return. But it's already moved down and fell apart in terms of what we are looking for it to do. The path we want to see, the move down, move up, that takes out an old high, move back into a fair value gap that was formed, and then a continuation upwards. This is our market structure shift. This is where we're looking for a fair value gap. And then trades down into 50%. We take our rocket ship up. This collapses right away. And just goes right to our stop. Comes down into this old fair value gap. What happens? Right here, it hits 50% of our target, and according to ICT, when price moves 50% of the expected target range, the stop loss can be trimmed by 25%. So as soon as it hits this, we can move our stop up 25%. And I marked that right there. Then we continue forward. And we get taken out. And that's the trading day. I don't like this trade over here. I think this is the only potential legitimate trade. We're looking for it to move up, energetic move up, creating a fair value gap, and then trades down into, keeps going down, honestly I wouldn't have taken this because the risk to reward ratio is not all that great. It's just barely a 1-to-1, and at this point that's not the type of trade I'm looking for. So I think for that reason I wouldn't have taken this trade. As tempting as it is to take this one or the next one, moves back into here looking for target up, it just doesn't happen. Well, that's it for this one. Thanks for watching. If you could like and subscribe, I'd appreciate it. Any questions, please post them in the comments, and I'll see you in the next one.